Hello and welcome to Financial Intelligence. In this video, I want to provide a summary of Michael Burry's take on Bitcoin based on his deleted tweets. Michael Burry was depicted in Michael Lewis's book The Big Short and the subsequent Oscar-winning movie of the same name. Michael is famous for betting against the US subprime mortgage market and profiting from the 2008 financial crisis. There are plenty of Bitcoin bulls evangelizing the digital currency these days, but Michael Burry is not one of them. Recently, he has had a couple of tweets about Bitcoin which are now deleted. In this video, I'm going to summarize three main reasons why Michael Burry is not bullish on Bitcoin based on those deleted tweets. This does not mean that you should short Bitcoin, but it gives you another data point in case you are considering investing in Bitcoin. If you like the type of content I provide, consider subscribing to this channel and give this video a thumbs up, and also hit the notification bell so that you don't miss any of my future videos. Here are the three main reasons why Michael is not bullish on Bitcoin. I will add the links to the articles highlighting his tweets in the description box below so that you can check them out later. Reason number one, FOMO traders. Michael believes that current rush to invest in cryptos is fueled by FOMO. He considers investing in Bitcoin at current prices pure speculation. He tweeted recently, and I quote, "All hype/speculation is doing is drawing in retail before the mother of all crashes. When crypto falls from trillions, or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed." FOMO has severe negative implications on how we make investment decisions. When we are fearful of missing out on quick gains, our amygdala automatically and quickly activates the fight or flight response, overpowering the frontal lobe, which is responsible for rational decision making. The bottom line is that when feeling FOMO, your amygdala hijacks your brain. It significantly reduces the availability of the part of the brain that we use for rational decision making. Investors who speculate this way have low conviction and are rarely long-term investors. They are so-called weak hands which are going to fold as soon as the market starts moving in the opposite direction. Reason number two, trapped bulls. Another reason why Michael is not bullish on Bitcoin is the large number of Bitcoin traders who are sitting on losses. In his recent tweet, he writes that trapped bulls often fall for the latest support. What he means by trapped bulls is all the traders who gave into the hype about Bitcoin and bought it at super high prices when it was going up and up. Because Bitcoin's price has declined significantly since then, these trapped traders are sitting on large losses, and most of them are anxious to get out at the first opportunity. This makes Bitcoin's recovery from recent lows more difficult because as soon as Bitcoin starts to go up, some of those traders are going to want to get out at their break-even price. This does not mean that Bitcoin prices cannot go higher from here. We all know that everything is possible in the markets. However, the large number of trapped bulls is what concerns Michael about the future of Bitcoin. Reason number three, excessive leverage. In another tweet, Michael Burry pointed out that one major concern of his about Bitcoin is the amount of leverage used by Bitcoin traders. Crypto's problem is in leverage, he tweeted. If you don't know how much leverage is in crypto, you don't know anything about crypto, no matter how much else you think you know. Michael's hypothesis is that there are a lot of speculators who have used leverage in order to build their Bitcoin positions in the past. In other words, these individuals have borrowed money in their brokerage accounts to buy more Bitcoin. Brokerage firms allow these accounts to use their borrowed money as long as the value of assets in those accounts remain high. The main challenge is that if Bitcoin starts to drop, many of these leverage accounts are going to be liquidated by forced involuntary sales of those Bitcoin positions. Therefore, sudden Bitcoin price drops could create a snowball effect which would cause even more downward pressure by forcing more and more of these susceptible leveraged accounts into liquidation. In summary, Michael Burry is not a Bitcoin bull because he thinks that FOMO traders created a big Bitcoin rally, and there are many of them who are trapped after the recent drop in Bitcoin. Another concern of his is the amount of leverage used to drive the Bitcoin prices higher in 2020. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the comment section below. Don't forget to subscribe to this channel and like this video, and also hit the notification bell so that you won't miss any of my future videos. Thank you and take care.